in Melbourne live. Good morning to you. Let's talk about some currency moves, if we could, just to get things kick off, because the A-dollar was pushed around overnight. Looked as though it could flirt with 104, didn't quite hold the line. What are some catalysts now in the hours ahead for a return to that elevated status?
Morning. Yeah, no, it does seem like most of the risk currency space is finding some support at the moment. Unfortunately for the Aussie dollar, there's that toss-up between fiscal policy and monetary policy affecting sentiment at the moment. So it just seems it's stuck in that range between 1.03 and 1.04. Traders just don't quite know what sort of catalyst they need to push it beyond that 1.04 level. But certainly the fact that we're seeing iron ore gravitate back to towards that 120 mark, and we are seeing a bit of a tick up in some of the China data, showing that we might have seen a bit of a trough or some sort of bottoming in the cycle we'd seen over the past few months, and that could help support the Aussie dollar and possibly find some buyers into weakness.
What about the yen, Stan? Good morning to you. Weakening against the Australian dollar. Speculation the Bank of Japan will move further monetary stimulus, asset purchases, that particular mechanism, potentially next week. We've also had that CPI data coming out of Japan this morning, inflation. Given that, what is your expectation for the yen?
Yeah, well, we'll probably continue to see this buy the rumor, sell the fact approach on the yen. Certainly that Nikkei report suggesting that the Bank of Japan's considering a 10 trillion yen expansion to the asset purchase program is going to continue to gain momentum. Of course, now the main problem is with this priced in, anything sub 10 trillion or at 10 trillion could result in a sell the fact affair, and I think that's what most traders are now a bit wary about. Of course, we've got that CPI reading coming in slightly better than expected, still at -0.4 versus a consensus of -0.5. So it remains a little bit tricky at these levels. Certainly, we could see some sort of reluctance to push it higher, and we could start seeing some selling into the Asian session today. But absolutely, it does seem like that Nikkei report has continued to see the dollar-yen push higher. Of course, we are now looking at that June high at about 80.63 after touching 80.35 this morning. So we'll continue to monitor it above 80 and see if it can hold that level.
Just a bit of a comparison between the investor reactions of course, Macquarie. We had that first half result come in stronger but missing forecasts, and ResMed, those shares steady now despite its stellar performance for the first quarter. But Macquarie, a real outperformer, 4.4% higher.
Yeah, absolutely. With Macquarie, I think generally before the market opened, there were a lot of expectations that it would trade a bit weaker. But the thing is that the analyst range on that headline profit, which was up 18%, seems to have been pretty wide. Of course, it came in at 361 million. The consensus average was perhaps 371 million. But if you look at some of the analysts that actually came out with expectations below that 361, like Credit Suisse, it does seem like it's been a significant beat. They actually feel that the momentum on the operating expenses side of things will continue to help drive the company into a better position. Of course, they do say they're achieving some sort of operating efficiencies, which basically probably means there's been a lot of restructuring going on over there, and that might continue and continue to help drive those expenses lower despite a fall in operating income.
All right, Stan Shamu, IG in Melbourne. Thanks so much. Appreciate your insights today.
Cheers, Warren.
Well, Whitehaven shares down 3 3/4% to the minute, $3.08 on that stock right now. Whitehaven Coal sees no sign of a